Hello, and welcome to theCUBE pod, episode 111, 111th episode. I'm John Furrier, Dave Vellante. Salute, Dave. Come on, get the salute out there.
John.
you got a salute.
Doing,
That's your patented move.
What's happening? How you doing?
I'm in California, Palo Alto. My daughter got engaged the same night that Taylor Swift got engaged. So huge news there. And I'm going to host the party, meet the other side of the family, be on my best behavior. Show good force, but
congratulations, John. That's big. That's big news. Yeah. Did you know this was coming?
I knew it was coming. It was a surprise for her, though. Like she kind of knew. They'd lived together in New York.
That's awesome.
So it's all good. Small party turns into 35. Next thing you know, it's 40. You know how it is, Dave. But great.
I actually don't. My kids aren't there yet.
Well, you have big parties. I know that. I've seen pictures.
Yeah, that's for sure.
The week was interesting. I feel like a whirlwind, being in New York, jumping on a plane, hitting to Vegas for VMware Explore, slew of earnings this week. The tech scene, hot chips in Palo Alto, Stanford. We saw Dell earnings, Nvidia earnings. Mongo had a huge surprise on their numbers. They were up massive. So just ton of activity, of course, love to comment on Dell, but you can't talk about Dell and AI factors without talking about Nvidia. And Nvidia continues to dominate, even with the shortfall with H2O, H20, I should say, the sales, no sales to China in Q2, and no sales expected in Q3. Yet revenues were up. Wall Street Journal and CNBC both reporting kind of what we've been speculating on these big GPU sales is that Nvidia has literally a handful of customers that count for like almost 40% of their sales. That brings up the whole CapEx, big hyperscalers, who's going to spend? Do they stay with Nvidia? Alternative chips are coming out. Wall Street Journal broke a story this morning. Alibaba has a chip that might come out to compete with Nvidia. So major geopolitical implications. Intel's got like $5 billion of the US cash came in. Again, to your continuing coverage of your breaking analysis on Intel, which by the way, the Wall Street Journal should definitely give you credit, by the way. I said that last time, but there's no way they shouldn't source. Industry analysts have been talking about this. You've been driving that. And again, I mentioned hot chips. It was a very much an insider technical event here in Palo Alto at Stanford University. Nvidia was there in force, all the top, chips, semiconductor folks. Broadcom really wasn't there. I did see some chip folks at VMware Explore, of course, owned by Broadcom now. Ton to unpack with VMware. I mean, I think they're really shocking the world with the fact that it went from, it's a dead company narrative, the war against the company because of the price increases. But Hot 10 has delivered products, so we're going to see that. We're going to talk a lot about that. But let's get into Nvidia, Dave, first, because I want to get your thoughts, because I know that you attended an analyst session last Friday. I wasn't available. I took one day off this summer, so I decided not to do any work that day, play some golf. But you were on the call, and the news came out. You and I are both digging into Nvidia in a big way. You got the China impact. You got the whole moat conversation. Their ecosystem is developing. It's kind of a mixed bag right now in terms of where people see the enterprise landing on sales. So obviously the hyperscalers could turn off the spigot at a moment's notice in terms of spend. Well, of course, they're not really doing it now. But then you got the enterprise still lagging. So what's your take on NVIDIA's earnings? I love NVIDIA. I love NVIDIA and Broadcom in terms of stocks, but what's your take on the NVIDIA earnings, their position, their posture? What are the things that you're seeing?
Well, so I thought it was a great quarter. I don't know how you can't look at that quarter. I was looking at Twitter and seeing a lot of negative comments about the quarter. I'm like, this company's like growing at 50%. They did like 47 million, a billion on the top line, and they're growing 50%, and you're crapping on them on Twitter.
I know.
I mean, to me, the quarter was just a validation of everything that we've known, is that the AI, momentum continues, and it's true that it's driven, to your point, by, a few very large customers. I mean, with something like, what'd you say, 40%, or go down to 2 customers. So that's got to be Microsoft, obviously, with OpenAI and ChatGPT. and what? Probably Google?
I mean, all the
Not
neo clouds
AWS.
too are ramping up. Could be CoreWeave, it could be AWS.
No,
I
it's
mean,
not CoreWeave. It's not CoreWeave yet.
CoreWeave's
It's
got
not
the
CoreWeave
Dell
yet.
action.
Well, but so CoreWeave, they're spending, I think, don't hold me to this, but I think they're spending like $8 billion last quarter on CapEx, and it's going to grow to 20 billion. Compare that to, I think it's probably Microsoft and Google are driving that. But then the other thing is, um, Jensen cited 600 billion. I wrote a blog about this, and I've asked Nvidia to comment. He cited several times on the call, as did Colette Krebs, their CFO, $600 billion coming from the top four hyperscalers, big three US hyperscalers, and presumably Meta. And you add up what they're saying, what those four companies are saying in their conference calls, earnings calls, it's hard to get over, much over 400, 415, maybe 420 if you put your thumb in the scale. So it's still huge, but there's a big gap between what Jensen was saying, 600 billion, and what these companies are saying, roughly 400, 420 billion. So that was interesting. Does Jensen know something that we don't know? Is he like leaking inside information on their internal forecast? I was like, wow, what's the delta there? And I try to come up with ways to explain it. Ben Baharin and Sarbjeet and I have been going back on Twitter with different theories. And then the other thing you talked about is he's raised his outlook between now and the end of the year, this decade, the remaining years of the decade, from like 2 trillion to 3 to 4 trillion in data center spend. Now, Furrier and I, our forecast inclusive of 2030 is from 25 to 2030 inclusive is 2.8 billion. And that's includes about 750 billion in 2030. So you take that out, we're significantly lower, like 2.1 versus Jensen's 3 to 4. So that's pretty amazing. So all of that said, the point being, there's no end in sight to this AI demand. To your point, the real question that I have is, okay, if the return on invested capital starts to slow down and the hyperscalers dial down, will the enterprise and the edge and robotics pick it up? And will Jensen's law, what I call Jensen's law, not Moore's law on steroids, but spend more, make more, or spend more, save more. That's the true Jensen's
Spend
law,
more,
in my
make more, I
opinion.
think is what he said.
I think he uses both now. But I think, and I wrote this is a topic for my breaking analysis this week, separate subject. But I think that clearly holds up for hyperscalers because their network utilization and their energy constraints and the performance per watt, all that ties in to the new Jensen's law. The question is, does that hold up for enterprises? Probably not as well as it does for hyperscalers. And does it hold up for edge and robotics? Again, we'll see. But right now, it's holding up really well, and his forecast is it's going to hold up for the next 4 years.
Yeah. The question to ask about Nvidia is, well, first of all, I agree with you that a lot of people are overreacting. A monster quarter. I mean, if you factor in the fact that the China H20 sales are not existent, zero in Q2, and expected.
But they
Q3.
Found some customers for H20.
The demand for GPUs are off the charts. It's like a line around the corner, like a bread line. In soup kitchen, you get those Nvidia new chips. There's a significant advantage for the infrastructure. If you have the horsepower, you can win with AI. So, but it does bring the question up on spending. If alternatives exist, their moat has to be secure in their competitiveness. So you got to look at, okay, what happens if there's alternatives? What happens if spending slows down? And is that even possible? Do you think that's in the near term possible? I don't think it is. I think there's not enough capacity. Now the question is,
there's certainly no evidence of it, is there? There's zero evidence.
I see zero slowdown. No. I mean, if you read the tea leaves, at least when I put my ear to the ground, there's no slowdown of GPU demand. If it's not going to go to China, it's going to go somewhere else. There's definitely people stockpiling up those systems. But it brings the question to enterprise. I want to get into this because Mongo.
Before you go there, I want to talk about that, but I just want to say this. I think the reason why it doesn't slow down is it's kind of tongue in cheek, but spend more, save more actually works for the hyperscalers. And I think that's what GPT-5 was all about. GPT-5, as you know, John, didn't impress in the benchmarks. It's just kind of barely, eked out the lead. But that was an economic announcement where they're basically using, better, more efficient infrastructure and dropping dollars to the bottom line. And so as long as that dynamic holds up and these guys are building data centers, by spending more with Nvidia, they actually will make more money. And until that dynamic dries up, I think this thing continues. Now, let's talk about the enterprise.
No, hold on.
Maybe
I want to just add one point, if I could, to the infrastructure side. If you look at Nvidia's announcements, I went through their analyst portal, read some of their stuff that was behind the NDA wall there, and all the actions at the networking layer, right? So a lot of the NVLink Fusion stuff they're doing. They introduced last Friday scale across, which is not a new concept, but definitely genius on the marketing side for Nvidia to go scale up, scale out, and then scale across, which means data centers. That's probably going to be optical or some sort of high-speed connection. But now they're connecting data centers almost like nodes in a cluster. So you're seeing a lot of the innovation around what you do once you have the GPUs. You got to manage the power envelope. So power is the bounding function for the data center. So I still think there's a lot of headroom to stockpile GPUs because you can actually configure them. And I had a long, in-depth conversation with Ram Valaga from Broadcom about this, and that you could actually take bottlenecks out of the network with networking, right? So for example, if you connect high-speed chips, not cables or optics, to handle some of the connections, you're essentially now putting resources close to each other. That's like a nerd semiconductor innovation that makes the high performance systems better, right? So I think there's a lot more you can squeeze out of existing data center, and that supports the GPU demand because you might as well just grab them because you get an edge immediately with the speed. So like companies have a competitive advantage when they have the GPUs. So this is a significant business reason, not just, CapEx hoarding and bubble behavior. There's a legit argument and configuration once you get them, how you network them together. So high bandwidth memory, solid state as a storage tier. These are huge discussions we've been hearing about. So, I think it's huge. Now, as that goes,
so before you go on to enterprise, the marketing is brilliant from Nvidia. They're basically saying networking, you get networking for free. And this, by the way, applies for Broadcom. And because what they're saying is, if we can take network utilization from 65% up to 85 or 90%, then essentially what you're paying for the networking, you're making up in better utilization. So it essentially is free. And the same is true for Broadcom. I love Broadcom. I mean, Broadcom and NVIDIA, the market's so big. And I wrote a piece from that announcement that they made, the whole scale up, scale out, scale across. And I think, what I tried to do was, of course, NVIDIA was, giving me their Kool-Aid, and I interviewed their senior VP of networking, but I injected the counter, view, which is, Broadcom, Charlie Kawwas, OPS, open, low power and scalable with industry standard. And so they can both win. This is not a zero-sum game. And but NVIDIA's claim is we're purpose applying Ethernet for AI. We're building Ethernet for AI, and Broadcom is, their claim is, and they're right, is Ethernet's the standard, everybody's going to use it. And NVIDIA's like, we love open, we love standards, we love everything, we love proprietary, we love NVIDIA. They're everywhere. It's a remarkable story.
It's interesting because, I think we had this debate on the pod. I can't remember which episodes. I think early on about NVIDIA, Broadcom, and I think we used the example of the iPhone versus Android. I mean, do you really care that the iPhone has proprietary, it's closed basically? I mean, it's not closed in the sense of it's a closed system, but it's a closed system for Apple. They got chips that are standard.
I like it in some ways. I like it. Sometimes works better.
So that's one argument you could say. The other thing is this, and this is what I was talking about off camera with Ram Valaga, who's the GM and SVP at Broadcom, who runs the switching group, okay? And he wouldn't say anything. I was trying to see if I could squeeze some information out of him. But I said to him, I said, what if I use some of the Broadcom chips? We've got Tomahawk 6, they got Tomahawk Ultra and Jericho. Those three chips essentially do scale up, scale out, and scale across. They already got it. Right. They're way ahead of NVIDIA on the optics, the co-packaged optics. We saw that 2 years ago at their investor conference that we were invited to. So if you look at the chips, and with Open Compute Project, their summit's coming up, I'm looking very carefully because I think there's an open ecosystem approach that could be a threat to Nvidia. Let me explain. If you look at like the old white box days, remember? You could look at
Can't
that.
wait to respond to this. Go ahead.
Look at the white box days of servers, and you might be able to say, okay, what if an entrepreneur or engineers build their own servers and clusters to replicate the performance? Okay, notwithstanding CUDA that Nvidia has and some of the things they purpose built, but there could be an argument for a kind of a new market providers of gear to ship in raw materials, AKA servers, fabrics, switches, and build their own. So he was squinting. I'm trying to like, was that a yes or a no? But okay, what's your reaction to that? I mean, am I smoking
interesting.
crack
I think
or what?
Basically, no, I actually think you're onto something, which is your margin is my opportunity. But you were kind of dismissive of CUDA.
I wasn't dismissive because I said notwithstanding CUDA's advantage. And by the way,
well, right, but you can't just ignore that, right? That is their fundamental advantage. But by the way, I think we had another argument on the CUBE pod a while ago about InfiniBand. InfiniBand doubled year over year. So I think
InfiniBand's dead. Long live InfiniBand, right? That's the saying.
Yeah, exactly. So I mean, I couldn't believe that stat. That freaking InfiniBand doubled, and Spectrum X is growing, and our networking business is a $10 billion run rate.
Well, rising tide floats all boats, so I'm skeptical on the real impact of the technology. I mean, you could argue that
explain that.
If you argue that InfiniBand sales are up and Nvidia is crushing their quarter, it's just statistically they're going to grow with them because it's proprietary, not proprietary, but it's core to Nvidia as a connective tissue between.
Oh yeah, I see what you're saying. It's growing with it.
It's like, hey, PC shipments tripled.
Oh, the only slight negative in that quarter was cash, free cash flow margin was down. They cited days sales outstanding increase, but that's it. They still had amazing cash flow. I just feel like Nvidia's moat, because I do believe that the new Jensen's law of spend more, save more, or spend more, make more, spend more, save more is actually in play for the next several years.
Yeah.
And
the CapEx supports that for 100%. I would agree with that.
By the way, I think it's true for Broadcom as well, maybe not as concentrated, but then we started to talk about this and I interrupted you. I don't know how well that holds up for the enterprise. There's not a lot of real hard evidence that enterprise AI, on-prem AI, hybrid AI is a big contributor. I talked to Dell about this. They said, actually, we're starting to get, trickle some good action now with the enterprise with the servers, but there's so much demand from, XAI and CoreWeave that they got to service that demand. And you see that in Dell's margins. Dell's margins year on year, their gross margins dropped 300 basis points. And I guess that's why the stock got crushed. I saw the results and I said, oh my God, these are great results that Dell has. They big beat on the top line, the big beat on operating income, the nice beat on ISG revenue. Client stuff was mixed, not great, but they kept costs down. But the traditional servers were good. And the stock got crushed. I mean, absolutely crushed. And they raised their expectation. They raised their guidance, and the stock got killed yesterday.
Well, it's interesting. Mongo's big surprise also points to the enterprise as a bellwether, because Mongo's always got the database. Dell's a bellwether for the enterprise, and I think that supports
Snowflake.
Our narrative that we've been reporting and commenting on, is that there's demand, there's POC backlog, enterprises are a lot slower to adopt, there's a high security bar, and that there was a kind of a trough of disillusionment in the past couple quarters on the enterprise. So you're starting to see that pick up, and you look at also, we were just talking about Nvidia and Broadcom, there's still work to be done on the data center side. Now, I will say that in the past 6 months, every single conversation I've had with end user leaders is that the enterprise on-premise processing is going up. There's demand because the data is located there, that it's pushing that hybrid configuration up big time. So I think the market just has to catch up. So now I think is that that the enterprises now know this. They've known it for a year, but the enterprise, it's like IT is like going to the airport, right? It's like you got to take off your shoes, go through the security, maybe take out your laptop, take your belt off, go through 3 times. I mean, if you're trying to do anything in the enterprise, it's not that easy, which is why the consumer side on ChatGPT and some of these models are excelling. And so the startups are trying to get in the enterprise. So I think Mongo points to the adoption, because I saw Dave on CNBC this morning. He was talking about the fact that they shifted their sales strategy on the higher end up market to go after some of those bigger accounts. Because remember, they hit a lot of accounts from startups to the enterprise. So Mongo is seeing a lift on the software side. So if you start to see that happen, that means the on-prem activities happening too. And I was talking with Paul Nashwati, our analyst on our team who covers app dev. He's seeing developers coding more on-prem. So his stats from his data is also validating on the developer side that the developer action is now on-prem. So that means the pressure to the IT department, they got a gun to their head. They have to deploy like AI factories. So I think Dell will win there. Mongo's already kind of a bellwether. I think that's going to have a leading indicator impact, say Dell, although Dell revised down their Q3 numbers, which I think why the stock got crushed. But what happens next is, now that the developers are lining up, they're going to be pressure for provision software. And that's either going to come from the neo clouds, cloud configurations, but on-prem activity, not siloed, but like a private cloud. And that's why I think VMware event this week was a very important event for me to watch, because it was either going to be a dead cat bounce from VMware's Broadcom acquisition or a real product market fit. And to me, I walked away out of that as like a product market fit. Customers are building on-premise clouds, okay?
So before you go off of those other guys, I want to make some comments, but I want to talk about VMware too.
Yeah, so I think the action's all pointing towards on-prem data center build out accelerating to meet the demand for the developers and the apps. Because now that everyone realizes that they got the data there, they're using RAG, they're doing some stuff, they got some POCs, I think you're going to start to see the floodgates open. And which is why I always say, there'll be a clear and TSA pre for the enterprise soon, where you start to see some, some fast tracking of.
Clear's getting crowded.
You get clear. We got to get clear and TSA pre. That's the key. Yeah, but this is what's happening. The enterprises now have set the standards. They have their bars that they raised up on terms of resilience, certifications, and Dell AI Factory, although very well positioned, isn't fully turnkey. You still got to configure it and load it up. And you see with Nvidia, it's all networking, so it's not like you're loading any software.
And it needs a stack. It doesn't have the stack yet as they're building that out. But I want to make a comment about Mongo. They had a great quarter, and because Atlas was, grew 29%. But to your point, EA, which is their on-prem instance, came in way better than expected. So they actually grew. This is, I think, the second or third quarter in a row that they've grown, and the guidance was for declining revenue here, so a little bit of sandbagging. Yeah. But they had a great quarter and they raised. And Mongo's back up over $20 billion valuation. The other company that absolutely crushed its results was Snowflake. So now that's cloud only. So you got everything growing. The cloud's growing faster than on-prem, but on-prem's coming back. And the main focus with Snowflake was the growth. They grew 32%, so they're accelerating growth. They got record new product revenue, which is awesome. Their NRR was strong, all that stuff, and they raised guidance. But a couple of points there. One is, I think Snowflake is succeeding because it's actually makes a lot of sense to bring agents into Snowflake where your data is actually pretty clean. So they can drive agentic workflows, pretty well. But the other point I want to make about Snowflake is their valuation's back up to $66 billion, but it's $35 billion lower than Databricks. Databricks is smaller. It's probably losing money. We don't know that for sure because they're private, but pretty sure they're losing money. And as a public company, Snowflake is under the microscope. Databricks, maybe Ali Ghodsi rides it out for a while.
Well, their valuation was over $100 billion. Okay,
yeah, Databricks and Snowflake's now at $66 billion. And so that's kind of an interesting juxtaposition.
I was told by an insider that Ali Ghodsi said, "Hey, you know what? If people want to just give us money, we're going to take it." Now that's his soundbite. That's the internal scuttlebutt. His phone's blowing up all the time. He says, so essentially, raising $100 billion valuation, basically keeps them private. So what that tells me is that one, they're clearly using that stock as currency in the private market. Compared to Snowflake, a public company, all transparently revealing their numbers, is Databricks hiding something, right? So the question I'm asking myself is, why would you want to go public if you can command that kind of capital at that kind of valuation? And word has it that Databricks only has like 4 huge customers, OpenAI and all these hyperscalers. So if they don't have a diverse client base, then they're betting the ranch on agentic developer side and hosting and managing the multi-cloud configurations. To your point about Snowflake, Snowflake is well positioned because they have the kind of institutional mechanisms that customers have in place already. And the question is that a moat for them, right? So can Databricks actually win against Snowflake? So I would argue that, if you start having these institutionalized mechanisms in these enterprises, and they're going to have to scale that up, Snowflake actually might be better positioned than Databricks. So, I'm going to start digging into this heavily because that could really screw up their IPO.
You remember the sort of debate? It was stupid by me, but the debate where I got in with Ali about this, because I just made the comment that, people confuse sometimes the Databricks TCO and the Snowflake TCO, and Ali didn't like the way I had framed that and analyzed it. But my point is, somebody said to me the other day that serverless is actually hurting Databricks margins, and I'm like, okay, why would that be? Well, because now the onus of management is on Databricks, just like it is on Snowflake. The difference is Snowflake makes good margin on its AWS. That was always Snowflake's challenge, is they bundle in the AWS pricing and they mark it up. And if they don't mark it up, then their margins get killed, and they're a public company. So by going towards serverless, which is the big move last year, as you well know, with Databricks, that puts the onus on the management on them because they're bundling that price in, which makes it more of an apples to apples TCO. That was my only point, and I didn't make it well. And I don't know if that's true because we don't know. Databricks.
Well, I mean, they just raised $1 billion. Why would you turn down $1 billion in cash?
Well, you wouldn't.
You wouldn't.
I'm just pointing out, we don't know what the real facts are. These are just rumors that people say. They're whispers like, hey, serverless is hurting Databricks. It's like, okay, so what does that mean? I haven't talked to Databricks about it.
I think it's helping Databricks big time. I mean, their serverless offering is damn good. I was at their event. They are really well positioned. Again, they're going more open source, as you know, but they are targeting the developer side of it. So again, back to the Mongo example.
I think the point was it's hurting. I think the point was it's hurting margins. It's got to be helping their overall business. And I don't know if that's true or not, but they don't have to make money. They got to grow. I mean,
the question is, when will they go public, right? So to me, it's like, okay, and to your point about what was Snowflake's valuation? 55 billion, you said?
66 billion compared to 100 billion for Databricks.
Yeah, one's private, one's public. Public markets act differently. Now, we know there's a private market that's basically public, and that's what we're seeing, these large late stage, pre-IPO, essentially liquidity events happening, 10 ways from Sunday. So, that to me is key. The thing that I'm watching is, like, if I'm Databricks, I just bought myself more time, right? I got $1 billion in the CFO's psyched. He's got $1 billion in the bank, and just start building out. So this is gonna be very interesting to see. So unfortunately, they're not public, so you got to do digging around. We'll see. But the enterprise side is gonna accelerate in 2026. I think it's the year we're gonna see real production workloads come in. The AI factories will start to get settled in. You'll start to see the demand on the developer side get satisfied with essentially like DevOps on steroids. You're going to start to see new kinds of, coding, agent assist coding, a lot more AI use cases. So I'm bullish on the enterprise AI. So,
so your point earlier about Dell AI factory is interesting because it is largely just a bunch of hardware, and they're building out their ecosystem, but they've got to get. They've got to have a data play, just like the cloud guys do. The cloud guys have so many options with data. They got Databricks, they got Snowflake, they have, if you're AWS, you have Redshift, you have Aurora, you have your own sort of data stack, you've got your own governance stack, you've got SageMaker, you've got all these wonderful tools. So Dell's got to, they can't replicate that, but they have to be selectively opinionated. They've got Starburst. This is why I reached out to Cloudera. Cloudera has an event that we'll be at the same week as our AI Factory, the Data Center of the Future Media Week at the NYSE, I've reached out to Cloudera because I think they could be a key, piece of the puzzle for on-prem AI. Cloudera actually has a really good data stack. They've got database, they got governance, and it's strong. They just got bowled over by the cloud. And when Hortonworks and Cloudera emerged, they each had two separate roadmaps. Rob Bearden made what was, I think, the right call. He said, look, we can't support two roadmaps. Let's converge them into a single roadmap. Well, when that happened, a lot of customers were like, okay, we're going to go to the cloud. We're going to go to Snowflake and Databricks. And that, kind of hurt Cloudera's business. But they made the right call, I think, because they said, look, we got to bet on hybrid. And hybrid is the future, and now hybrid AI. And they've got a really strong data stack. And that combined with Dell's AI Factory, combined with Starburst, which is, data access and query and there's some governance as well. And, build up other governance alternatives all the way up the stack with security. That now comprises a viable on-prem AI solution, not just hardware, but hardware and surrounding capabilities. And while the financial services companies can, build their own AI stack, most enterprises don't have the skill sets to do that. They need solutions. And Dell can be an amazing solution provider because these startups don't have a route to market. And so Dell gives them a route to market. So what do? They go to the enterprise. So they go to the cloud. But companies like Cohere and Glean and many others in the startup world, these cybersecurity companies, could partner up with Dell and then be packaged into the AI factory. That's I think, a compelling value proposition for mainstream enterprises that don't have the skills to build all this stuff out.
Yeah, I was talking about the AI hype. Rob Hof was reporting just all the stories from SiliconANGLE this week. For the AI doomers out there, some downsides. Stanford had a study that says entry-level job for developers are down big
MIT
time.
study, you saw that, right?
Website revenue losses because of all the scrapers, and Cloudflare put that thing in place where you got to go through their thing.
Yeah.
So like if you're in the website business, you're losing money because being ripped off accordingly to the people. Elon Musk had a haymaker lawsuit against Apple and OpenAI. Anthropic settled a patent or a precedent-setting copyright infringement lawsuit. That sets the table. And then finally, in the news that everyone's talking about, was the death of a teen, and his parents blamed the lawsuit that they filed on the conversations he had with ChatGPT. In other words, the kid went in and said, "How do I kill myself?" And so the question there is, like, they should have caught it. So like that, these are all like new things popping up. The suicide is huge because, ChatGPT just did its job and there's no guardrails, right? So they're suing in a wrongful death lawsuit against OpenAI for the suicide. Okay, brings up the question: should that have been stopped? It might not be a deal killer for the ChatGPTs of the world, but this is like a big discussion. What if someone tries like typing in things like how to blow up the neighborhood? How do I make a bomb? So these are like a doomer questions. What's your reaction, especially the lawsuit, David? Because this is like, it's like,
well,
a conversation with ChatGPT.
What I
noticed, to help. Oh, you're so great. Yeah, do it. You don't know.
Well,
it's dark side.
I don't know how, people talk about guardrails. I don't know how you guard against everything because people are so creative. You can see all the phishing attacks we get now. They're just so good and so creative. And at some point, they're going to mask the sort of sender. I think the other point I would make is that when we all use multiple LLMs, you can't get ChatGPT to make an image of Trump. We can't do that. Go to Grok. Grok's like, here you go. So Grok's like the wild, wild west. It's old news now, but Google, Gemini was, saying, making the founding fathers, people, people of color.
It's just not contextually relevant. But here's my point. If you're going to have AGI intelligence, they say the reasoning algorithms, if you're seeing a prompt, you got to figure out that, hey, this teen is obviously contextually interested in committing suicide or having a conversation. I mean, hell, we have the best people in the world in technology working on how to do ad placements. That famous quote by Jeff Hammerback, like the brightest minds are working on ad technology. Why couldn't you not put an ad, but just like, hey, here's some services, or hey, you want to talk to someone. So these are kind of like new,
like on the bridges, signs on the bridges.
Yeah, it's like you can see,
desperate,
I mean, definitely the prompts are happening. AI should be smart enough to saying, whoa, 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 you don't do that, right? Or hey, you might want to consider, and the argument that I've been having with people is that ChatGPT is too vanity focused. You're the best at it, you're great. And people are complaining that it kind of leads you on with kind of false positives.
Well, it's true. It's true. You're like, hey, is this a viable premise? Yes, it's
great
viable.
Idea.
It's a great idea. And then you talk to Furrier and he's like, yeah, you're full of shit. Yeah. You're like, oh, I trust Furrier more than I trust ChatGPT.
So the tensor technology is just linguistic semantic management. It's not true reasoning, right? So this is a debate I had on a LinkedIn thread. It got very technical, but it should be smart enough to identify it with AI. So it's not like there's some sort of adjudication team or human involvement. You could actually write the software to identify these situations. So again, this kind of points to the embryonic state of AI, right? So again, enterprise AI is not going to let it in. This is my point about the enterprise the other day. I was talking about it in theCUBE at VMware. Why would an enterprise let a financial institution let AI into their system when it can't deliver 100% of the value? If there's even one chance that it's going to miss a security hack or any kind of, or create a vector for a bad guy or bad action, they kill it. So they say, no, we don't want it in here. So this is kind of, this is stalling things in the enterprise. I think this is a big deal.
I liken it to, you remember when search came out, you had to do weird things to get the search results that you wanted, this plus that, plus this, plus that. I put out a tweet today, and it was around that $600 billion CapEx number that Jensen threw out there, and I put, tag Sarbjeet. I always tag Sarbjeet because he'll engage and he'll bring in other people, which was great. He said, hey, you might have seen this. He searched, well, he went to an LLM and started, asking questions about the 600 billion. And the article, I sent the article to Rob Hof to have him published on SiliconANGLE. Rob published because he's so fast. Sarbjeet said, oh my God, your article was already up in these LLMs. And it's like, so I said, yeah, SEO optimization's dead. It's all about LLM optimization. My point is, I feel like with these LLMs, you kind of have to steel man, to your point, especially ChatGPT. It's like, hey, is this a viable concept? What do you think? Does it hold water? Yes, you're great, do it. And then you got to flip side of that, you got to steel man it and say, hey, this is a nonsense. Give me the counter argument to this. And then you look at it and say, okay, now I got both sides. I'm going to combine them in my own, make it my own narrative and do what I feel is, try to back it up with my own data and my own opinions. And so I guess my real question to you is it the responsibility of the AI companies to play that role? And I think my conclusion is, yeah, they absolutely should.
That consumer product, the AI should be smart enough. Like the ad example is interesting. You always get these contextually relevant ads based upon your user behavior, okay?
Yeah.
And so the technology to identify something contextually as relevant as someone essentially chain of thought prompting suicide, looking for plans or whatever they're doing, that is easily identifiable by AI. So that should be, OpenAI should be on this, right? And there's plenty of body of work, so it's not like a technical problem. It's just that they haven't gotten to that yet, because I think there's a lot of, philosophies around, well, hands off, or hey, that's censorship. Not really. I mean, the ideal user experience for AI is essentially self-service and generative value. Like it's when it generates stuff on the fly or at runtime or whatever you want to call it, but the whole goal of AI with intelligence is saying, hey, you shouldn't do that, or here's some help before you do it. I mean, there's all kinds, I don't mean to make a joke of it, suicide, but the point is, technically that's a solution that could be implemented. So it's not like it's not possible. The question is are we early on in the journey? Obviously they are. OpenAI's got other priorities. So there's a safety team out there probably saying these things, but the developers are like, well, we have other priorities to ship the best token, fastest token out,
Yeah, we'll get to it.
We'll get to it later. Yeah, sorry. And then, so again, I do think there's some responsibility. Now, I'm just pointing it out because it's a use case where there's a dark side of AI there. So the doomers are jumping all over it. Now, the other thing that spooked people last week and this week was the MIT study that said most enterprise AI projects are failing, and the results are interesting, and this kind of plays what we were just talking about. So here are the reasons. Based upon the 300 public implementations, 4 patterns emerged. Limited disruption. Only 2 out of 8 major sectors show meaningful structural change, meaning it's like a chatbot or some sort of like low-hanging use case. Number 2, the enterprise paradox. Big firms lead in pilot volume, but lag and scale up into production. That's exactly what we've been saying for months, which is why we're doing a lot of content around AI factories to get the word out and identify what's working. Number 3, investment bias. Budgets favor visible top-line functions over high ROI back office activities.
Huh, interesting.
Run the process, people, how much does it cost to run the business? What's the expression?
Yeah.
You know?
Run the business, grow the business, transform the business.
So back
right?
office is where all the cost savings are, certainly, and that's what enables kind of the new apps. So I would believe that. And finally, the 4th reason is implementation advantage. External partnerships see twice the success rate of internal builds. So in other words, it's hard to build.
What was that one again?
Implementation advantage. External partnerships see twice the success of internal builds. Meaning,
a Deloitte study?
shadow
Is that a
AI
Deloitte study? Is that Accenture study?
No, this is MIT.
Really?
Yeah.
That's interesting.
So, you know, which side of the divide are you on? High adoption, low transformation? So, you know, I think it's a little bit off base. I mean, it's probably accurate as a snapshot, and I think it's just evolution. We were just talking about the POC purgatory. You know, we're seeing evidence of that. Doesn't mean AI is bad. It's just the state of the union. You know, the divide is it good or bad? So again, I think this is, again, on the enterprise side, that makes a lot of sense. What I found interesting was the external outsourcing. Okay, that was a huge thing, right? So that to me means, okay, I'm outsourcing it. You know, enterprises hate outsourcing, number one, when the crown jewels are involved. They'll outsource stuff that's, you know, not core to their business, but, you know, anyone who's an enterprise intellectual property or any kind of infrastructure knows you don't outsource core competency. And data and AI is clearly in that case. So I think the IQ level and the sophistication of AI is causing the build internally to be very slow. So hence the Dell earnings, hence the signaling that the MongoDB's got uptick on the software that is a precursor to the infrastructure. So I think that's why I predict AI infrastructure has to get built out faster, and that 2026 will be a banner year for enterprise AI. So everything's pointing to it. It's just the sequence of events, the evolution. So that study, I'll send it to you because it's really good. It's called.
This is, wait, the Stanford one or the MIT one?
The MIT one. I'm sorry, the MIT one. Let me pull it up here.
Yeah, that's the one that said 95% of AI initiatives.
It was covered by Fortune magazine. Well, it's a paywall. No one really reads that anymore because of that. 95% of generative AI pilots at companies are failing. That was the headline. That's the salacious headline from Fortune. Okay, it's not 95%. That's just I don't know where they got that number from, but you know, I got the PDF. I went through it. You know, how do you define that? I mean, POCs, most of them fail anyway, right? So it's like, I don't really put value in that statistic. But those reasons that I listed in the survey, pretty right on. I tend to agree with it, but I don't think it's an indicator that AI is failing, and that's what, you know, the press jumps on. And speaking of press, I mentioned Dave was on CNBC this morning. You're going to get a laugh out of this. The anchor on Squawk Box Morning, she's awesome anchor over there, does the intro. They call them Dev, so because of his spelling.
Yeah, they do that all the time.
So I'm like, they obviously don't cover Mongo. but how many times have you said in your head, Dev?
My first time
I interviewed him, I actually said Dev.
I have to always say to myself, it's Dave, it's Dave. Now, my name's Dave, but I think he should change his name to Dev. I think Dev is a cooler name.
He targets developers. He should, that's a better word, you know?
No,
I'm one of you.
Exactly. You're right on. The trend is your friend. We didn't mention CrowdStrike. CrowdStrike got crushed the other day because it guided, people were disappointed in the guide, but it dropped like 8%. And it's back up again. I mean, CrowdStrike, just people looked at that as a buying opportunity. It's not all the way back up, but
yeah, I mean,
I saw George Kurtz on Kramer last night. George Kurtz he's a baller.
Yeah, he's good.
I love that guy.
I love CrowdStrike and I love Palo Alto Networks. I just like the teams there, the founding teams, and the talent. They know their stuff. They have a great product. I think if you go back and watch the tape or watch the CUBE pods. Remember when CrowdStrike had that incident with Delta? Was it Delta? It was Delta, right? It was Delta.
It was everybody, but
stock
Delta's
plummeted.
Was most pissed off. Yeah.
Remember what we said?
July 19th of 2024.
Remember what we said? We said.
I said a lot of things about it.
We said, don't buy the stock. It's going to go. I mean, there's no. Yeah. We said what happened, right? So clearly they took a hit.
Oh, I always felt like they were going to manage it properly because they're going to do what. Remember, I do remember saying they got to do what Okta didn't do. And by the way, Okta's coming back, but they did. But the brilliant thing that CrowdStrike did, John, is they have Falcon Flex, which is, Falcon's their platform. And they said, listen, we're going to go to you customers, basically going to give you the platform. And then when it comes renewal time, we're going to give it to you at a super deep discount. When it comes renewal time, we'll look at what modules you're using. So they gave them basically low cost access, really discounted access to their entire platform. They got people using it and it's working. Now they're converting people. Yeah. And they're still working through that, by the way. Yeah. And that's part of the reason why they're so conservative on the guidance. Yeah. But CrowdStrike has got a great product. And I got to give credit to Palo Alto. The negative on Palo Alto is, they're just cobbling together a bunch of, assets like Cisco and they don't integrate them and blah, blah, blah. I saw Nir Zook, by the way, is retiring. But Palo Alto, they're just executing beautifully. And again, another baller, Akash Arora. Akash Arora is just, he is, good leader. And I like Palo Alto. I like the acquisition they made of CyberArk. People were crapping on that. I think it's really smart.
Well, we got a big week next week. We got earnings. We got some good earnings coming out that's going to be relevant to us. Salesforce, Broadcom. Salesforce, Broadcom, HPE, UiPath, and Zscaler are the ones I'm watching.
Yes.
Rob Hof and team are all over that on SiliconANGLE. There'll be other ones, but those are the ones. Broadcom is going to be a big star next to that one. Salesforce will be very interesting. HPE, I'm interested, but I kind of expect that to kind of be kind of a celebratory Juniper thing, but I'm not expecting massive results from them. We'll see. I'm not seeing a lot of action from HPE, so we're going to have to look at that heavily. Zscaler is probably going to do very, very well. UiPath will be very interesting, Dave, to see what comes out of that one. They're clearly leaning into agents versus running from it, even though RPA was a market before agents. It was pre-agent technology, but it was more.
I think with UiPath, people are saying that, hey, wow, this AI stuff, this probabilistic AI, it ain't working the way I thought it was going to work. Whereas, RPA, it's very deterministic. It's sort of, it's the original RPA was script based. Now it's much more advanced, but it basically works. It's like a plumbing. And I think, the premise of UiPath is, hey, we're going to put AI and agents on top of this proven plumbing, which I think is a good strategy. They're all about orchestration. I'd like to see them. I mean, they're not in a good position to really harmonize that data and build that whole system of intelligence, but they'll be a player there. So I'm interested to see, if they can start. I share with you survey data from ETR. RPA kind of got crushed because of AI, but it's kind of creeping back up. I think there's signs that it's like got legs again.
Yeah. I was in New York City last week for the Vulture DDN panel. That was successful. But Dave, I have to ask you, next week we have our special invitation from IBM to play tennis.
Before we get off earnings, I forgot to mention, so Pure Storage like had great earnings. They grew like 13%. NetApp was up 1%. Part of the Dell disappointment was their storage was down 3%. So storage is the gift that keeps on giving for Pure. Dell has got to figure that out because Dell's margins are under pressure. If they can get the storage mix up, then their margins will make more money, and that's they got to get that cylinder firing. So I just wanted to sort of mention that. Tennis. I'm so excited, John. I'm gonna come down and see you. It's gonna screw up my Labor Day, so we spend Labor Day evening with you in New York because we got to get up early and get down to Flushing Meadows, right?
Yeah, it should be great. Speaking of storage, by the way, since you brought that up, I was at VMware Explore. There was storage vendors there and the big cloud providers. The ecosystem has changed over. No networking vendors. Cisco, Juniper, Arista, no one was there. Of course, Broadcom makes networking stuff, so you ask yourself the question, storage is certainly hot again and continues to be hot. I mean, when was storage, since we've been doing theCUBE for 16 years, not growing?
Well, you asked the question in 2010 of Joe Tucci, first theCUBE we ever did. Why is storage sexy? I don't know if it's sexy, but it's important.
Yeah, I mean, I think it's going to be a boom for the storage vendors. So whoever can jump into that would be great. But yeah, so we'll see. Yeah, I'll see you next week. IBM event, US Open tennis, hitting balls with the pros.
So we're actually going to be hitting on center court, right?
Yeah.
How's your tennis?
I can hit a forehand, backhand. I can't serve.
I can't hit a backhand. Yeah. Crap. I mean, they're gonna put the jugs gun on our serve, like the speed test. I'm like, I don't need to do that. And I got a bad rotator.
US Open in New York is so much fun.
Start my excuses already. I've never been. I'm really excited. I used to have a really good forehand and a good return. I was like, Andre Agassi on the return. I could return well, but I don't know. I've lost my fastball.
Can't wait to see you on the court, Dave, smashing baseline volleys with the pros.
I can hit some of my forehands pretty well. Are you going to bring a racket or no?
No, I don't have a racket. I don't even own a racket. I got tennis shoes though. My son's got 2 rackets. I
just had my Billy Baloo restrung. Billy Baloo. And so that should be fun though. IBM treating us right. So
yeah. All right, we'll see you next time then. I'll see you in New York, and that's wrap for CUBE Pod.
All right,
again.
bro.
It's going to be a very busy fall. Calendar's shaping up to be great. Thanks for watching, everyone. Check out siliconangle.com, of course, theCUBE.net. Check out theCUBEAI.com. The results are getting better every week. I've been using it all week. So check it out. That's public beta right now. We'll see you next time.